So hi Ross, thank you for joining us. How are you doing?
Yeah, fantastic, Jake. Thanks for having me. Excited to chat today.
Good. Would you mind giving us a quick introduction to yourself and CyberCube, please?
Yeah, no, of course, absolutely. I'm a member of the leadership team here at CyberCube. My current role is head of strategic tech ecosystem, which really is just all about enabling our clients to leverage CyberCube analytics in their workflows and their systems, so that they're accessible to them, every day. I've been here at CyberCube for just almost 5.5 years at this point. And then prior to that, I was a partner at Accenture, where I led large transformational programs across the insurance industry. So I've been living and breathing insurance for a few decades at this point. But yeah, it's been a lot of fun. And then CyberCube, for folks that aren't aware, CyberCube, we have what I like to say a simple but challenging mission as our organization. Our mission is to provide the world's leading analytics to quantify cyber risk. So said another way, really putting dollars and cents or pounds and pence to cyber risk as you think about that from an insurance product. And we serve the entire insurance industry, the whole value chain. So we have clients that are brokers, agents, carriers themselves, reinsurance brokers, reinsurers, and even the capital markets are using our analytics all across. And in fact, our analytics are used by over 70% of the world's global cyber premium. So touching a lot of that space all around the world.
Awesome, thank you. So a whole spectrum of the insurance industry that are involved with CyberCube. On cyber insurance, then, as a comparatively more recent addition to the coverage market, can you talk to me about some of the nuances of cyber risks when it comes to challenges unique to cyber lines in today's landscape?
Yeah, absolutely. And I think you definitely hit it on the head there, Jake. This is, the newest line of insurance, and depending on how you count, 50-ish years kind of thing. And certainly one of the fastest growings. It is a unique line of business. And the kind of example that I always use with folks is cyber is very different than other lines in terms of where is that attack coming from. So the example I like to use is, if I look at a hurricane, for instance, right? I split time between Chicago and New Orleans down in Louisiana. And I can look at a map and not know much about insurance, but know that the hurricane risk in Louisiana is very different than the hurricane risk up in Chicago. Right. So just how that risk looks on a map is very different. It's a little harder to also look at a map and understand what my risk is as an insurer or even as a business to a specific type of cyber. So someone attacking AWS or someone attacking Adobe or any one of those technology platforms that make all these businesses work today. That's hard to do in terms of just kind of looking at a map, if you will. Another example too is also just on the causes of that, right? As hurricanes are forming out there in the Atlantic, there's one forming and kind of heading towards land. There's oftentimes another one forming out in the Atlantic. That second hurricane is not watching what the first hurricane is doing and saying, "Ooh, how can I follow that path to cause even more destruction and destroy even more property?" But on the cyber side, that is exactly what is happening, right? Each cyber attack is watching the previous cyber attacks, building on learnings from those, taking into example what exploits worked for them. How can they build on top of what was happened before to get more access, cause more damage, and expose more of those things? So I think that's part of just a couple of the fundamental differences in terms of thinking about the cyber lines of business versus the more traditional property and casualty lines that have been out there.
Yeah, makes total sense. It almost like the points of risk and the points of weakness are cumulative and exponential in cyber, which is unique to cyber. And you mentioned AWS as well. We'll touch on that later because it's very topical right now. So on some of the challenges you mentioned, how can these challenges be turned into opportunities to drive competitive differentiation for insurers? And how does that filter down to teams tasked with implementing technology or data solutions to such challenges? And what lenses should they look through, and what should their priorities be in evaluating solutions?
Yeah, no, it's a great couple of questions there in terms of how to think about that. I think, one is doing the most that you can as an organization to have that view of the risk, right? So understanding what that risk is, understanding the different types of drivers of risk, right? There are different kind of signals, if you will, or exposures, right? Is one that's very, very common now that wasn't 5 or 7 years ago is like multi-factor authentication, right? Like that's a red line for many organizations. You can't get insurance unless you have multi-factor authentication on your network, protecting your network from those accidental exposures and accidental like password sharings and those types of things. So really having that complete view of what what you're insuring, and then being able to say, now how do I turn in all those risks, turn that view of those risks and that security posture and that technology posture, how do I turn that into something that is a common currency that I can talk about as a carrier in terms of what types of covers, what type of limit do you need to have to really protect yourself against these? What does a very bad day look like for your type of organization? How does your organization compare to the market at large, to other organizations in your peer group, that type of thing, and using those to have really nuanced discussions with the insureds, between the carriers, the brokers, and the insureds as they're thinking about those discussions. Really having oversimplification, but having that view of risk and then using that to have that common discussion to really help folks understand what the risk is in this newer line of business, what a cyber policy is actually going to cover, and then what's the right type of risk transfer that you want to undertake with that cyber policy versus some other types of actions that you might do to mitigate or transfer some of that risk.
Hmm. Yeah, makes sense. Thank you. Um, and so moving on to some of the messages and topics we've seen CyberCube discussing recently, thinking about one of the foundational problems in underwriting, the two truths. An underwriter has the application, which is a static and self-reported truth. And then there's the dynamic real-world truth of a company's live security posture. So philosophically, how should the industry be thinking about reconciling these two realities? What does it mean for an insurer when the risk that they thought they underwrote changes overnight?
Yeah, it's a great question. I mean, it's really right at the crux of underwriting, right? As I think about underwriting this risk and managing and maintaining writing, pricing appropriately, the appropriate terms and conditions, where am I attaching to a tower, all of those types of things. The fundamentals are very similar in cyber as they are to other lines of business, right? How do I understand that risk and how do I spread that risk and diversify across my portfolio, right? Back to that map example, if I'm only writing things in Louisiana, my risk profile is very, very different than if I'm spread out across a multitude of states. Similarly, we find in cyber, one of our tenants at CyberCube is that every single cyber loss originates at a single point of failure, and that single point of failure is a technology, right? And so there's always one technology at the end of the day that was that entry point or that point of failure where this loss originated. That may be one point of failure that is attacked in one spot and then spreads across a whole bunch of organizations, or maybe one point of failure at a given company that spreads across different systems within that company. So really understanding those types of things and being able to diversify across those things is critical. So as an underwriter, how do we think about that? I think both sides of those coin are very important, right? It's very important to both understand the overall terms, structure, trends of the risk profile of both an individual company that you're writing, as well as your overall portfolio, right? So what does this organization look like? What are the tendencies of this organization? And not just what does this organization look like on any given day, the day that an application is submitted, the day that a policy is goes in force, but the overall trends of that organization. So one example of things that we see successful underwriters looking at and taking into account is not just, are there outdated pieces of software on an insured's network? So are they running, Windows 10 now that Windows 10 is no longer supported or something of that nature? Not only is that there, but also how long do those things remain on the network, right? Because the longer those technologies remain on the network, the more risk there is, right? The longer the sprinklers are turned off, the more fire risk there is, type of thing on the other side of the house. So really thinking about both what is that risk on any given day, as well as what are the overall trends for that risk really helps folks to set, the appropriate terms, the appropriate management of that risk with the individual policies. I think another part of that discussion is really around looking at that portfolio, right, and that kind of diversification. There has been questions and in some circles skepticism about, can you truly even diversify within cyber, or is all cyber inherently increasing your risk and your aggregation of risk? Again, kind of coming back to this concept of a single point of failure, we've seen in the data that you can diversify risk as long as you're looking at and have that visibility to those different technologies and the different points of failure across your organization. How do you explore the aggregation of risk on a specific technology? And then as you're writing policies, how do those impact the overall diversification of risk there, right? If I'm a carrier who's writing big, large, global Fortune 100 companies, each one of those adding to my portfolio has the ability to make significant shifts and impacts to my overall portfolio. And so I need to take into account on an individual policy basis what are the impacts to my portfolio and potentially change, have additional sublimits, different terms and conditions, attach at different points on a tower, those types of things. Similarly, if I'm writing all the way on the other end of the side and writing small businesses all the way down to micro businesses, an individual business is not going to swing my portfolio here and there because it's not a large enough risk. But as I start to see a bunch of businesses, I may start to see aggregation in a specific area. I may unintentionally, if I'm not monitoring this, start to write a whole bunch of businesses that all happen to operate on one specific technology. And therefore, if that technology is impacted and impacts all of those business, my goodness, I have this unintended consequence of that. And so, really looking at that perspective across the entire portfolio is really important as well.
Yeah, and probably an overgeneralism and a gross oversimplification of your answer, but it seems like being cognizant of the snowballing, magnifying kind of nature of cyber risk is a key facet to keep in mind when underwriting for cyber risk, and that alongside the more diverse and the greater the number of risks, the greater the number of the potential failure points are involved. So I guess to boil it down, variety is something to be really, really aware of in cyber.
Yeah, yeah, 100%. And I think I mean, that's motherhood and apple pie in terms of insurance overall, but like how you think about that diversification of risk in cyber is different. Again, similar to just how you think about that risk overall. And then I think one other thought that pops into my head too is cyber, for years, decades, we've heard the insurance industry talking about value added services or going beyond just providing the transfer of risk and then the repair when bad things happen, but helping prevent and helping monitor. Cyber is the line where we are seeing some of those more mature and more advanced organizations pairing a traditional insurance policy with some of the active monitoring activities so that they're actively monitoring risks on an insured's network in some cases, as well as what's going out there in the landscape, being able to proactively share when you see stories about bad things happening, proactively share with your insureds that have similar positions on their network to say, here's a mitigation, get out there and mitigate this so that we're getting in front of that before the claim ever happens, which of course is great for the insured because they never have the loss. And of course, similarly on the carrier side as well.
Makes total sense. And it's an interesting point. I've got a question coming up for you on that actually. Um, on the single point of failure topics that we've discussed, now's probably the perfect time to cover it. So your analysis on the recent AWS outage discusses how the event perfectly highlighted the problem of systemic risk. It suggests the company's own security is almost irrelevant if a cloud provider fails. So what are some of the key practical learnings from this for insurers, and how should those learnings impact the way they view data requirements when receiving cyber risk?
Yeah, no, it's a great question, and I think one nuance there certainly is security is very relevant. It is not relevant to the specific failure of that single, these additional technology pieces, which I think was at the crux of that recent AWS outage, right? So, how do we get folks to think about what are practical things that they should be thinking about on this? It is some of those traditional tabletop exercises of planning for bad days, and how do we mitigate that? I think one of the biggest things was some folks didn't understand the potential implications and when their rollovers might happen to different geographies, right? This impacted one geography, but it was the biggest and most impactful geography. It was also one where some of the core AWS systems, and I'll get over my skis here pretty quickly, but some of those core AWS systems like authentication and those types of things that tie other parts together all flow through this specific spot. So even if your primary actions were in a different geography, you may have still been impacted as it flowed through the network. And so considering that and really digging into and understanding those technical dependencies that you have within your organization, really understanding, doing those tabletop exercises to understand, okay, what are the trigger points for failovers? Do we have failovers for the overall? Do we have failovers for different parts, web layers versus storage layers, and those types of capabilities? So doing those kind of back to basics, if you will. I think some of those criteria and considerations were things that, in a pre-cloud world, when data centers were hosted on site and applications and infrastructure were all hosted within the four walls of an organization, there was a whole team dedicated and thinking about all these things day to day. As more and more has moved to the cloud, in some organizations, we've seen less of a focus on that and less of a realization around those types of things. So being able to have those kind of activities, and recognizing that, I think, is there. And then certainly this also opens the questions around, back to that phrase, single point of failure within an organization. Is a single point of failure an acceptable risk? And how does that structure and how does that manage? I think the other side of this that's really interesting too, right? As is typical in the news cycle today, we saw lots and lots of news about this. We saw outrage from organizations and governments saying, how in the world can one company take down the internet for a day? Like, this is too much control and power. And now, a week, 2 weeks later, we're kind of hearing nothing about that. I think on the other side of that is the discussion around, um, what are the implications of this? And specifically, as I think about the insurance world, making sure as a company, you understand what's actually covered, what's not. When are you triggering your policy, right? What remains to be seen. You saw the kind of estimates that we put out there, but what remains to be seen is how much of this is actual insurable loss versus interruption in those activities. So really truly understanding what is the coverage, what are the triggers for coverage, and when and exactly how am I transferring that risk via the insurance purchase, to make sure that organizations, leaderships, boards have eyes wide open in terms of truly understanding that. I think that's one of the biggest things that catches people off when events like this actually happen, is not the outage, but the discrepancy of expectation versus understanding of what they've kind of actually contracted for in an insurance policy.
Interesting. And it seems like every event that occurs like this, we had AWS, we've had CrowdStrike. Um, every event that occurs is probably building that understanding that then is informing the future of cyber insurance in some way. And I guess to tie your previous two thoughts together, when an insurer has data that shows a client's digital front door is unlocked, it seemingly creates a new dynamic of needing to shift from a reactive repair and replace model to a proactive kind of predict and prevent one. Does this insight create a new moral or business obligation for the industry? And what does that really mean for the insurer-client relationship?
Yeah, this is a really good question, and uh, quite frankly, a challenge. Existential is a bit dramatic, right? As we think about the potential, responses to this question, there are other versions of this, right? And it's kind of back to how much protection is the right protection, and as you said, how much of a, when do we create moral hazard? When do we have this moral obligation? When do we have business obligation to do these things? I think as I alluded to earlier, I think the cyber line of business is uniquely positioned to have some of these capabilities, these monitoring, these watching in advance, these taking proactive actions, is really well set up for that for a couple of reasons. One, as we said earlier, it's a relatively young line of business. And so we don't have the years, decades, in some cases, centuries of kind of history and expectation around, well, this is how this product works. And so, since it is still relatively early days in the cycle of this product, there are the opportunities kind of establish and adjust and tweak those standards around what actually fits and what is part of cyber cover, if you will. So I think that's important as folks kind of consider that. And I think the market will continue to explore and focus on that piece there. And then I think, the other side of that that's really interesting, hopefully folks are counting at home, the AI and those types of things coming into this space, right? The more predictive AI that we have, the more that's impactful on both sides of the coin, right? I think a lot of times we tend to immediately go to the, the negative side and the bad actors and what are all of the terrible things that this can unleash, right? We see phishing emails that we've all done the trainings of like, watch for bad grammar, watch for such and such. It's like, well, now all of a sudden that's out the door because AI can write, in perfect grammar and wherever, English, American English, Northern English, Southern English, etc., right? Much better than any human can. And so what is really interesting and something that for some reason, maybe I'm just too glass half empty of a guy had shot over my head for ages was, well, the other side of that coin is very true as well. So as the bad actors are leveraging AI, so are the good actors, right? So are the underlying technology platforms. So are organizations and best practices as they're thinking about this. We have AI to help chase and prevent and attack these bad actors and prevent that. And in some cases, maybe, to take your metaphor of the open door, show us a window that we didn't even realize was unlocked and be able to proactively at least tell us it's unlocked, and in some worlds even lock the window on our behalf, right? So I think that's another really exciting and kind of positive side of this discussion around is AI and that ever increasing speed of which that is moving forward, and the autonomy that it is gaining, that can be beneficial and not just scary and negative, if that resonates.
Yeah, totally, totally. You brought up the phishing training that we've all kind of worked on, and my immediate question in my head was, I wonder how many more times I'm going to fall for those fake emails. But yeah, it's an interesting one, as you say. The cyber industry is comparatively very young, um, and its ability to respond to things in real time, it really is unique to cyber. Like, what other kind of line of business can respond to the risks in real time to mitigate them? And then when you add kind of increasing power on each side, both the attack and the defense, it's a really interesting dynamic to navigate, I think. So solving these problems is one thing, but making solutions to the problems scalable is another. And the ever-growing prowess of vertically applied AI means insurers must embrace LLM-driven solutions to keep their offerings competitive. For data delivered by AI to be adopted, it has to be trusted. So how do we as an industry approach the black box problem? What's the minimum viable explanation underwriters need to trust the data in front of them, particularly if it's come from outside of the submission?
Yeah, it's a great question, and I think it's a challenging one in some cases, right? I think at CyberCube, our models have been driven by machine learning for a long, long time, right? Since before we started calling that AI. And part of that is just the sheer volume of data, right? This is a constant challenge, in the industry, overall, and in some ways, kind of one of the dirty secrets of the insurance industry, right? The insurance industry is built on data, right? At the end of the day, and so there's tons and tons of data that is used and tons of data that is collected across insurance. Although I would argue insurance hasn't done as good of a job as optimizing and leveraging that data at the point of decision as some other industries have, if you will. And so I think again, this is a great opportunity for cyber as this early stage business, as it's taking off, as it's maturing, to be building and incorporating these things in from day one. How do we leverage? How do we access the best of that data that's out there? And so I do think this is an interesting question. It's going to vary a lot from organization to organization, geography to geography, based on kind of regulatory environments in different organizations. I think what is important is to be able to show, hey, these are the inputs, these are the outputs, to get in there and be testing and validating that data and doing so on a regular and ongoing basis. One of the things that we see in the conversations that we have with the market is exactly this: how important it is for us to be transparent around, here are the inputs to the models, and then here are how those various inputs impact the outputs of the models. We do regular and ongoing training and validation of our models, both on aggregation and anonymized data, as well as we have specific clients that we will have specific annual, semi-annual discussions with, where we look at and go back and look back in time to say, hey, here's what we would have expected as the outcome from the models. Now let's go back and, with the benefit of hindsight, now let's go actually run these these things through for the last 6 months, year, and see how we performed in terms of expectations versus what reality is there, and then use those as the continuing refinement process. I think all of those are critical to success, and that kind of continued partnership across this is a critical engagement piece of that as well.
Yeah, makes sense. Makes sense. And I guess to get a little bit more philosophical here, your CEO, Pascal Miller, has talked about underwriting shifting further towards science and less towards art. So let's project that 10 years out. We have a nearly perfect stream of data on every risk. In that world, what's the uniquely human element? Like, what art is left for the underwriter when science has become such a overwhelming aspect of managing and ingesting risk?
Well, yeah, maybe I'll circle back to challenging the premise of having this because it's a hypothetical anyway. But I think as much as some people would love that, I think that will be. Yeah, well, we'll see. We'll see, right? I would love to believe we have this view of perfect flow of data and perfect view of that data on an ongoing basis and that type of thing. I think where the art in that case comes into play is what has all the way back to the coffee houses in London at Lloyd's when in this market started is the relationship and the discussion with folks, right? Like that is more critical in this industry than many other industries. It has and remains that way. Some might argue, some of my colleagues from other industries might argue stubbornly so in some cases, but I think that relationship based discussion is critical to that, right? And that's what allows underwriters today to say, okay, I've got a model that is telling me all of these specific things, but then I'm still providing discretion and allocation to that, whether that be where to attach, what limit, tweaks and adjustments to make to pricing. I think part of that relationship is making sure we're maintaining the view, seeing the forest for the trees, if you will, and not being too myopic of looking at, okay, this is the specific cyber. I have perfect data. Here's exactly what the algorithm says. Here's the perfect outcome. We know exactly how this flows, but also making sure you're considering that broader relationship, right? How long and what types of other relationships are underwriters having with that account, right? Cyber is rarely the only thing that is part of that forms a relationship with a client, right? And insurance is not an industry that looks at things in scales of, months to years, but multiple years to decades, right? Like carriers are not writing risk to write that risk for a year and then move on. The goal is to have that relationship for many, many years to come. The other side of that is also let's not lose sight of what the insurance industry is all about, right? It is ensuring and protecting that risk and ensuring that these organizations are able to take on and manage risk in their businesses. The kind of eye-rolling joke that I like to use is, especially when I go back to my university and talk to folks there who are quick to say, why in the world would you ever go work in insurance? I remind them that this is an industry that is literally here to ensure that every other industry in the world exists, right? The global economy ceases to function without insurance. And a big part of that is building upon the specific data and analytics and the outcomes of those models to take that relationship focus to say, okay, what is the right thing to do here? As an insurance organization, we are focused on either preventing, ideally, bad things from happening or helping people get back on their feet or businesses get back on their feet when bad things do happen. And so that structure all goes into this discussion beyond the number, if you will, and how underwriters continue to think about this.
Hmm. Yeah, and I think there's quite a profound message in that definitely applies to cyber insurance, but can also be applied to many things in the face of AI. There's value in the unique human view that we have versus large language models, and there's a level of moral involvement from humans there that I think it's poetic and, as I say, profound to think about. Um, to end on a bit more of a fun one, then, if you could change one thing about the insurance industry, what would it be and why?
Let's just lean into AI and have AI just manage. No, wait, that's the exact opposite of what I just said. No, I tease. I do think I alluded to this, I think, a little bit earlier, right? As I was talking about one of the kind of dirty secrets in this industry is how much data this industry has and the opportunities and the opportunity cost, quite frankly, of leveraging and optimizing that. And this is not, as we just discussed, about taking humans out of the loop and just automating everything to black and white numbers. This is about how do we better structure this and how do we better enable those discussions and those validations and those balances to folks. So how do we make insurance better at what it does, which is, again, ideally preventing or helping make whole when these bad things happen? I think there are opportunities that have been left on the table at this industry at large in terms of adopting some of these technologies and leaning into this space. So I think, the one thing I would change would be a little bit more willingness to experiment and explore. And I think as long as the industry is doing that from the right place, that's aligned to their values of making folks whole and preventing bad things from happening, at the end of the day, that only serves to benefit and bolster the organizations and their relationships and, quite frankly, the outcomes for this industry.
Hmm. Yeah, the willingness to explore feels like it's a bit of a tipping point at the moment. We're seeing more and more insurers, carriers, the market in general, embrace technology solutions, new processes, procedures, in order to kind of improve their offering and better insure the world. But we'll keep plugging away at it between us. So Ross Wirth, thank you so much for joining us. All the best.
Yeah, Jake, thanks so much for having me. This is a great chat.